What's up everybody, GenExDividendInvestor here. If you're new to my channel, then welcome. My goal is to inspire, educate, and entertain you as I share lessons I've learned from investing for over 25 years in the markets. My favorite strategy is dividend growth investing, so please consider hitting the thumbs up button, subscribing if you haven't yet, and click that bell notification. Thank you, I really appreciate your support. In this video, I'm going to reveal the top 10 dividend stocks for April that thousands of dividend investors on my Discord chat server had the opportunity to vote for that they're buying or plan to buy. We had a few new stocks make it into the list this time, which is exciting to see. Also, M1 Brokerage has an awesome promotion running for a free $30 for new users. The way it works is you click on my M1 referral link in the description of this video and then either open a new normal taxable brokerage account and fund it with $100, or open a retirement account and fund it with $500. Then you need to keep your money inside the new account for 30 days from the date of the deposit to get the free $30. If you're serious about growing your wealth, then start now by spending a few minutes of time to get that free $30. Finally, remember that normally you want to look at financial metric trends and other info when you're analyzing stocks to invest in. This video is merely communicating some high-level info for your entertainment, thus don't take this as financial advice. Okay, the 10th most popular stock in the poll with 17% of voters is Broadcom, ticker AVGO, a world-renowned semiconductor company. Broadcom has a consensus analyst rating of a buy, an okay 10 consecutive years of dividend increases, a seeking alpha payout ratio of 53%, a decent 2.99% yield, a crazy 47% 3-year dividend CAGR, and a high 56 PE. If that CAGR doesn't get you a little hot and bothered, then I don't know what to say. AVGO is at about $482 a share, just below the 52-week high of $495 and way above the 52-week low of about $219. Semiconductors are a great place to be right now as business is booming and there's a shortage around the world. As this screenshot shows, over time less chips have been manufactured in the USA, which had 37% of the global semiconductor share in 1990 and only has 12% now. Thus you can see why companies like Broadcom and Nvidia and Intel and such have a nice runway in front of them. AVGO is looking a bit spendy to me, but with their positioning and performance I can kinda understand it. Okay, the 9th most popular stock in the poll with 20% of voters is the world's largest semiconductor company, and that's Intel, ticker INTC. Intel has a consensus analyst rating of a hold, a light 7 consecutive years of dividend increases, an awesome 26% payout ratio, a low 2.14% yield, an okay 7% 3-year dividend CAGR, and a low 13 PE. Intel has had a tough year. Their last few quarterly reports weren't stellar, but now they have a new CEO and they have over 15% of the market share, which is incredible. The fact that they've had a few missteps is part of what makes them more interesting to me, as those led to some stock hits, though they have done better since December. Intel is at about $65 a share, just below the 52-week high of $67 and above their 52-week low of about $43. Did you know that Intel was originally named after the two founders Moore and Noyce, who called their company NM Electronics? Yes, that's the Moore who also came up with Moore's Law, which basically states that the number of transistors you can pack into a small integrated circuit doubles every 2 years. Okay, let's move on. The 8th most popular stock in the poll with 21% of voters is a prolific aerospace and defense company, and that's Lockheed Martin, ticker LMT. Lockheed is a consensus analyst rating of a buy, a nice 18 consecutive years of dividend increases, a good 40% payout ratio, a relatively low 2.85% yield, a nice 9.5% 3-year dividend CAGR, and a low 14.89 PE. Lockheed is at about $365 a share, below the 52-week high of $417 and above the 52-week low of about $320. Lately, Cathie Wood's ARKQ ETF, aka her Autonomous Technology and Robotics ETF, has been buying shares in Lockheed Martin, which is currently the fund's 12th largest holding, making up 2.7% of its portfolio. If it's good enough for Cathie, it's probably good enough for you, right? Okay, let's move on. The 7th most popular stock in the poll with 28% of voters is my favorite REIT, and that's Realty Income, ticker O. One of the things I love about investing in Realty Income is that it gives me cash flow from real estate without having to deal with headaches that can come from owning physical real estate. Like, I don't have to figure out what I do with a tenant who can't pay their rent because they just lost their job, nor do I have to worry about getting sued because someone tripped on the ice on my property, nor do I have to deal with a call about mouse infestation or whatever. No, I prefer the simplicity, less stress, higher liquidity, and more reliable income of my O cash flow. O has a consensus analyst rating of a buy, an aristocratic 27 consecutive years of dividend increases, a good 4.39% yield, and a weak 3.4% 3-year dividend CAGR. By the way, if you'd like to gain access to my spreadsheet, which is what I use to show the data you're seeing right now, then become a Patreon aristocrat of mine and gain access to my amazing dividend portfolio cloud product I built with the help of my friend Min8V, who is also the moderator on my Discord. Watch my video called Best Dividend Stock Spreadsheet Portfolio Tracker 2.0, which shows you all the features it has and see if it's something you'd like to consider using. Also, watch my Realty Income video if you want to learn why traditional metrics such as payout ratio, PE ratio, and EPS, amongst others, are not a reliable way to estimate the value of a REIT. So instead, professional analysts often use a measure called Adjusted Funds from Operations, or AFFO, to estimate a REIT's value, as it represents true residual cash flow and is often a better predictor of a REIT's future ability to pay dividends. Realty Income's AFFO per share was $3.39 in 2020 versus $3.32 in 2019, and they invested $2.3 billion in properties, including $921 million in the United Kingdom. Beyond those metrics, it's also good to look at rent collection percentage, and we've seen in the last few months they're hovering slightly over 93%, which is an improvement over what they hit in July when they were at 91.8%. When evaluating REITs, it can also be good to look at their key tenants to identify areas of concern. So if we analyze O's top 20 tenants and try to identify areas of potential risk, then we see that Regal Cinemas and AMC may be concerning given the pandemic. But it looks like we're heading in the right direction with the vaccines, and regardless, those two tenants only represent about 5.4% of the revenue. O also has tenants which the pandemic didn't materially seem to hurt, including 7-Eleven, Dollar General, and Walmart, amongst a ton of others. Let's take a look at Realty Income's stock movement over the last 12 months. O is at about $64 a share, which is below its 52-week high of about $67 and well above the 52-week low of $43. O's trends look really nice since the pandemic crash. Okay, let's move on before I make a joke about when Harry met Sally. The sixth most popular stock in the poll with 29% of voters is my favorite financials company that I own, and that's JPMorgan Chase, ticker JPM. JPM has a consensus analyst rating of a buy, a decent 10 consecutive years of dividend increases, a great 40% payout ratio, a low 2.32% yield, a great 16.4% 3-year dividend CAGR, and a 17 PE. If you're doing an actual analysis of a bank, then price to book value is often a better metric than PE, and you probably would also look at net interest margins, efficiency ratios, and return on average asset metrics, amongst others. JPM is at about $155 a share, which is almost at its 52-week high of about $162 and almost double their 52-week low of $82. Did you know that JP Morgan hated being photographed as a result of a chronic skin condition which disconfigured his nose? I'd say poor guy, but he was mega rich. Okay, the fifth most popular stock in the poll with 33% of voters is one of my favorite oil stocks, and that's Chevron, ticker CVX. I keep hearing that oil is dead, but I keep making more money in it. Something isn't adding up. Chevron has a consensus analyst rating of a buy, has an amazing 34 consecutive years of dividend increases, has a too high payout ratio due to the pandemic and due to the Russia-Saudi oil war, has a very strong 5.58% yield and a 4.82% 3-year dividend CAGR. Chevron is about $107 a share, which is basically its 52-week high and is well above their 52-week low of 65. Okay, let's move on. The fourth most popular stock in the poll with 34% of voters is one of my favorite communication services stocks, and that's AT&T, ticker T. T has a consensus analyst rating of a hold, has an amazing 37 consecutive years of dividend increases, has a seeking alpha payout ratio of 66%, has a very nice 6.86% yield, and a very low 2% 3-year dividend CAGR. T is at about $30 a share, which is below its 52-week high of 33 and above the 52-week low of 26. As most people know, AT&T has had poor stock appreciation for a very long time, and the previous management had made some bad acquisitions. Thus, their debt and poor stock movement made them not as attractive as they could be. So the bulls who are investing now in them are betting that the new management will be able to tackle their debt problem and will right the ship, and that eventually they'll be able to look back to today and see why this was a great buying opportunity. Of course, the bears disagree. Let's see where we are in 5 years and see if the bulls or the bears were right. Okay, the third most popular stock in the poll with 36% of voters is another of my favorite oil stocks, and that's Exxon Mobil, ticker XOM. Exxon has a consensus analyst rating of a hold, has an amazing 37 consecutive years of dividend increases, has a too high payout ratio, which means they need the price of oil to keep going up to get things back in control. They have a high 6.03% yield, and they have an okay 4.15% 3-year dividend CAGR. Exxon is at about $57 a share, which is below its 52-week high of 62 and well above the 52-week low of 31. Exxon has come roaring back since their lows. Okay, the second most popular stock in the poll with 40% of voters is a stock I jumped in on around February 1st, in which I showed you in a video called Watch Me Buy $450,000 of dividend stocks, and that's Altria, ticker MO. It was a nice time to buy as it's only been 2 months and I'm already up an astounding 25%. MO has a consensus analyst rating of a buy, has a kingly 51 consecutive years of dividend increases, has a seeking alpha payout ratio of 75%, which is a bit high but is normal for tightly managed companies in industries like theirs. have a high 6.55% yield and a 3-year dividend CAGR of 9.22%. MO is almost $52 a share, which is about its 52-week high and is well above their 52-week low of 34. If you like this space, then you might want to consider PM, BTI, and or UVV. Now, before we get to the number one stock in the pool, I wanted to mention a few other stocks worth considering, even though they aren't dividend stocks, and there's some of the ones in my growth portfolio, and those include Amazon, Google, and Facebook. Amazon is so powerful. The only thing that I think can realistically stop Amazon right now is the government. They are so strong, diversified, have so much growth opportunities, and are so well run. You really need to consider investing in Amazon. I just can't imagine where they're going to be in 10 years. Facebook is another one to evaluate with their incredible internet properties they own, along with crazy amounts of profitable data. Beyond stocks, you also might want to think about some small DCAing into Bitcoin and Ethereum after you have first invested in a strong dividend portfolio. That reminds me, I just read an article a moment ago about Visa that said that the digital asset bank Anchorage and the Ethereum blockchain have enabled Visa payments to be settled in cryptocurrency alone, and Visa said that it had completed the first transaction of this nature earlier this month, with Crypto.com sending the stablecoin USDC to Visa's Ethereum wallet address at Anchorage. Good stuff, but I digress. The most popular stock in the poll with 41% of voters is a great healthcare company I also own in AbbVie, ticker ABBV. AbbVie has a consensus analyst rating of a buy, has an almost kingly 49 consecutive years of dividend increases, assuming you count their time at Abbott, has an awesome seeking alpha payout ratio of 41%, have a great 4.91% yield, and a redonkulous 3-year dividend CAGR of 23%. AbbVie is around $107 a share, which is just below its 52-week high of 113 and is well above the 52-week low of about 71. AbbVie stock recently took a hit following some press about the FDA reviewing some of their drugs. Okay, now I'd like to shout out some recent subscribers who just joined my team as Patreon aristocrats. So thank you to Lepre for signing up. Thank you Mikey Mike, thank you Alan P, and thank you Andrew F. I really appreciate you guys who value my content enough that you're willing to sign up with my Patreon. So thank you from the bottom of my heart. You are directly showing me that you value what I do, which really helps keep me motivated to spend the countless hours it takes to deliver quality content. And most of all, it helps me show my kids how you can grow a business if you stick with it, which is a key reason why I do all this, beyond the fact that I'm so passionate about helping others learn about dividend investing. As an aristocrat, you gain access to my new Dividend Spreadsheet 2.0 product and to multiple private channels on my Discord, including one where I let people watch my videos before I release them to the public, as well as vote on some thumbnails I use in my videos, as well as get direct access to me. Please consider hitting the thumbs up button, subscribing if you haven't yet, and click that bell notification. Finally, I highly recommend that you join my free Dividend Discord chat server, which has thousands of dividend investors on it and is growing all the time. Thanks for watching, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.